Welcome to today's market report.
Germany stocks were mixed after the close on Tuesday, as gains in the software, media and telecom sectors led shares higher, while losses in utilities, transportation and logistics and chemicals sectors led shares lower. DAX lost 0.01%, while the MDAX index declined 0.1%. France stocks were lower after the close on Tuesday, as losses in the foods and drugs, gas and water and general financial sectors led shares lower. The CAC 40 fell 0.01%, while the SPF 120 index fell 0.05%. US stocks are seen opening in a subdued fashion on Tuesday, ahead of the release of key inflation data and with some of the country's banking giants leading off the new quarterly earnings season. The Dow futures contract was down 0.2%, S&P futures traded largely flat, while Nasdaq gained 0.3%. The major indices have soared to record highs in recent sessions, boosted by a successful vaccination program ensuring the country reopens, while being underpinned by massive levels of both monetary and fiscal stimulus. However, it is debatable how much longer these factors will remain in place. The US recorded its highest daily total of new COVID cases since May over the weekend, as the highly transmissible Delta variant works its way through the unvaccinated portion of the population. Attention now turns to the release of the Consumer Price Index for June, which is expected to have risen by 4.9%, a small drop from May's 5%. May's number was heavily influenced by the rise in used car prices this spring and by a base fact from last year's energy markets that is now fading. Rising inflation has been an important influence on Wall Street's recent movements, as investors fear an overheating economy could prompt the Federal Reserve to tighten its ultra-loose monetary policy sooner than expected. Oil prices pushed higher on Tuesday after the International Energy Agency warned that energy markets will tighten significantly if the group of top producers known as the OPEC Plus doesn't come to an agreement over adding additional output. US crude futures traded 0.1% higher at $74.16 per barrel. Brent rose 0.2% to $75.31 per barrel. Gold futures rose 0.1% to $1,808.30 per ounce. On the FX front, GBP/USD is under pressure on Tuesday due mainly to US dollar strength, down 0.33% at the time of this report, from a high of 139.04 to a low of 138. The greenback has rallied to a fresh 6-day high as measured against a basket of currencies in the index, following data showing the highest inflation in 13 years. The US Labor Department said the Consumer Price Index increased 0.9% last month, the largest gain since June 2008. Core CPI surged 4.5% on a year-on-year basis, the biggest increase since November 1991. The dollar index was 0.47% higher at 92.6. Not far away from the 3-month high of 92.844 printed last week. Meanwhile, as investors position for a faster pace of tightening from the Federal Reserve, domestic news from the UK Central Bank, the Bank of England, weighed on the pound earlier in the day. Sterling eased back from 2-week highs after the Bank of England announced in a press conference during its financial stability report that some asset prices looked stretched. Elsewhere, investors are worried about a surge in COVID-19 Delta variant cases will be problematic for asset prices, while the government plans to ease COVID-19 restrictions next week. This is likely to keep the pound on edge for the coming weeks, leading into the grand finale for the US dollar, which will be the next Federal Open Market Committee meetings during August. The price is at a crossroads and some further price action needs to occur for a bias to review itself from a daily perspective. The euro-dollar pair dropped below 118 in the early American session following the US inflation report, but managed to stage a recovery toward 118.40, with the greenback regaining its strength in the later trading hours. The pair turned south once again and was last seen trading at its lowest level since early April, losing 0.88% on the day at 117.82.
This is today's market news. Thanks for listening. We'll see you next time.